JB Cycles here with an update on December the 4th. So I see two main scenarios from here. Looking at the 16-week cycle pointing down into February, I could see a bearish scenario where we turn down to a lower low, or a bullish scenario where we go sideways, or at least make a higher low around February and then re-rally. So this 16-week cycle, or 80 trading days ringing cycle, that's the name Terry Laundry put on it. A quiz for today: what planetary synodic cycle is about 116 calendar days. Anyway, here I have the offset of 1 and 2 cycles, and as you see here, going back 2 cycles, we are meeting the offset of 2 cycles here. That should be a hard resistance to break through, but if we do, that's a rather bullish signal. And looking back at previous cycles, I look at these vertical lines. We see going back 1 cycle, the top was still a couple of days ahead, and going back 2, 3 cycles, the top was a bit ahead, and another cycle the top was a little bit ahead, but yeah, it should be near some kind of a top here. So zooming out, these hard landings or prolonged bear markets, they don't happen so often. And here I have the 42-month average, or we seldom break this average or break it with continuation. Going back 70 years, the COVID crash was very quick and brief, but we have had the 2008 bear market, the tech bubble, and going back very briefly in the 80s, but we have the 74 bear market and the 1970 bear market, and then very briefly a couple of times. So in 70 years we only have 4 or 5 real bear markets. So it's no surprise that the market is not accepting this is such a hard landing, because they happen so rare. So we try to find resistance at this average. So will we succeed and rally, or do we get the capitulation? From my pattern recognition, I see us still in this call it consolidation phase before we get the capitulation. We are stretching this rally, but in my opinion still in this pattern. Another scenario still very similar. We are still in this pattern, and it points down into around April. And looking at some examples from the past, we see we are in a similar pattern, and these analogs, they are topping around this point. But we are, well, I'll come back to these bear market rallies. Let's see now, where do I want to go next? As I have shown, my 7-year cycle is still giving a bias for downtrend into around March, or perhaps even the summer. But as we have seen, we are above this trend line, and we are above the 200-day moving average. So these are warning signs. It doesn't mean the bear market is over, but when we break these resistances, it's well, anything can happen, but it still may be bearish. Let's have a look at bear market rallies. These are not all bear market rallies, but many of them. And as we see the length of this rally, well, let's have a look at the average here. As we see the average, they could still allow for another, well, the Fed decision is around here, another week, 10 days. So I have put in another one here. This is not a bear market rally, this is a real rally up from the 2016 low, just for reference. So, you know, that would be the sideways into February bullish scenario. Let's have a look. Let's see. Well, my 4-week cycle. You know, it changed back in April into a new pattern, and I relate this cycle to the solar wind cycle. And back in April, May, we had several solar X flares, and they tend to change the solar wind configuration. And I observed in the solar wind there was a change in this period, and we find this new cycle rhythm. Here was a low, there was a low, there was a very bullish low, here we had a low, and here we had a low, and then it got messy. And I still haven't figured out what's going on here. Do we have a new cycle or rhythm? Or a couple of weeks back ago I looked into the solar wind and I couldn't see a change. We did actually have one solar X flare here around September, but not as many as in the spring. But I can't see or couldn't see a real change in the solar wind. So from my experience, I know sometimes we can have a couple of months where the cycle is disturbed and then it falls back into its correct pattern. So looking at the orange cycle that has worked since April, May, we see we are at the cycle top. So it could be that we still have this orange cycle, and it points down to around December the 22nd. You know, looking back a couple of cycles, I'm looking at this green one, going back 1, 2, 3, 4 cycles, and as we see, that's where this cycle high was, and this in red we had a cycle high, and the others, well, there we had the disturbance. So well, what else do I have? We have this one. This is the average of bear markets in blue, and in green I have the average of short bear markets. And you see the blue one shows kind of here we are in the consolidation phase, and then we capitulate, and it could be that's where we are now. And the green one says here we are kind of in the bottom formation and we're rallying, so could also be we're there. Looking back at this bear market, we see we broke a trend line, we broke the 200-day moving average, almost made a double top, but still we had capitulation. This one broke trend line here, broke the 200-day moving average, still some kind of capitulation. Here didn't break anything. Here we broke the 200-day moving average, still we trended down. Didn't break anything. 80s broke a trend line here, still had some kind of a capitulation. And the 2000 bear market, here we broke a trend line, we broke the 200-day moving average, still we had capitulation. Then we have the bullish ones. You know, I have measured this rally into here, so we see here we broke trend line, went sideways and rallied. Here rally, bit sideways, rally, sideways, rally, sideways. So, you know, it's a warning sign. We have broken the trend line, or are about to break it, and above the 200-day moving average, but could still be bearish.